Hello students, today we will discuss a question that came in the accounts exam held by the Assam Higher Secondary Education Council. So the question that we have is, the following is the extract of a trial balance of Assam Stores Company as on 31st March. The name of the company is Assam Stores Company and the date given is 31st March 2023. The information that is given here is sundry debtors 81,000 and bad debt is rupees 900. From this information, it is asked to write off further bad debt rupees 1000 and create a provision for doubtful debt at the rate of 5% on sundry debtors. So, what is sundry debtor here? Again, debtors are all the persons or parties from which the business owes money. So that we call our debtors, or we can say sundry debtors. And what is bad debt? Bad debt is the money that the business cannot recover from the debtors, or the debtors for due to various reasons cannot pay or unwilling to pay back to the business. That amount of money is known as bad debt. So bad debt is a loss for the business, or we can say expense, and debtor are the assets of the business. So, if we go by the rules of accounting, what it is asked, write off further bad debts. So, to write off bad debts, we have to increase from 1000 and create a provision. So, that means from 81,000, we have to create again 1000 bad debts. That means the losses will increase, and increase in loss, what it does, when an expense or loss is increased, debit is done. We know the rule here. And in case of sundry, so here sundry debtors will decrease because provision will be also made from the same sundry debtors, and bad debt will be also written off. So our debtors will decrease, and it is an asset account. So what we will do, we will credit. So now we will move to the answer part. So this is the explanation of the information that we have. So what do we do to write off bad debts? As it is asked or mentioned in the question, every time we create journal entries, we give the name of the organization and then we mention journal entry. And then we have the date column here, the particulars column here, the ledger folio column here, the amount, the debit amount, and this is the credit amount column here. So what do we do on 31st March? Bad debt account debit. Why? Because bad debt is an expenditure or loss for the business and it has been increased. So we debit this account by 1000 to sundry debtors. Debtors, that is, they are the assets and they are getting decreased. So this account will be credited by again rupees 1000. And this part we call is narration. In journal entries, we call this part narration, where we write in details or explain what is done here. That is, being we always start narration with the word being bad debt written off. So in this entry, bad debt is written off rupees 1000, that is, bad debt account is debited, and rupees 1000 sundry debtors account is credited. Now next, because bad debt again is an expenditure, and what do we do to expenditure at the end of the accounting period? We record that in the profit and loss account. So that means we transfer that to the profit and loss account. So we will transfer this bad debt to the profit and loss account, and what will happen? The profit and loss account will be debited. So we write it as profit and loss account debit rupees 1000 to bad debt account. Again, because we have transferred it, we will credit this account here, again rupees 1000. So now again we write the narration here, being bad debt written off, transferred to profit and loss account. Now again in the question it was mentioned to create a provision for doubtful debt. So what is a provision for doubtful debt? It is a certain an amount of money kept aside from the sundry debtors to cover the losses that has happened due to the bad debts. So it is mostly a risk covering provision. So what do we do? How do we open a provision? We debit the profit and loss account. Why? Because it increases the expenses or losses So we debit the profit and loss account rupees 4,000 to provision for doubtful debt account. Again, provision is a liability as well, so it will be credited rupees 4,000. And how 4,000? Because before the sundry debtors value was 81,000. From there we have created a bad debt, written off bad debt of rupees 1,000, so we are left with 80,000 rupees, and the rate of the provision was 5%, so 5% of this 80,000 becomes rupees 4,000. So this is how we have calculated the provision for doubtful debt. So being provision created for doubtful debt, rupees 4,000 is debited in the profit and loss account, and in the provision for doubtful debt account it has been credited. So this is the answer for this question.